experience we will ever have as people who expect to be extremely wealthy someday, right? And probably a lot sooner than you think if you get your mind right. And that's what I want to talk to you guys about today, because I've been spending a lot of time talking about the bear case. I've been telling you guys how I've been positioned for bearish activity, which we did get. We did. This move here, this rejection off the 100-day moving average, this was a beautiful opportunity to short. A lot of money was made if you were buying put options and you were using leverage properly. So this downside move, maybe it's completed. That's what I want to talk about here. I want to talk about the potential that this move, this tech sell-off, which it was a sell-off everywhere in the market. Every market, tech, industrials, crypto, everything had a sell-off here, right? This was basically like a 3-4 week sell-off maybe, and there's your bottoming tail, potentially to set up the reversal, potentially. And I just want to talk about this because we need to be positioned to make money in every single situation. So as I look at the charts this morning, I'm thinking like, okay, you know what? Let's start considering the bull case here and not worried about being right or wrong, just like literally letting your imagination run wild in the event that a bull case happens and what that looks like. So the first thing you got to consider is that what is the dominant asset class to the downside right now? Which asset class is moving with the most velocity in the downward direction? It's definitely tech. It's the NASDAQ. It's Bitcoin. Look what crypto did all of 2022. It was just nightmares. It was nightmares. It was ripping violently to the downside. If I had shorted Bitcoin at the beginning of 2022, I would have made a slaughtering. You know what I'm saying? So it's just like, okay, so tech, risk-on assets are the weakest right now. They are moving with the most velocity to the downside. So then the question is, what's moving with the most velocity to the upside? Basically, I'm trying to say, what will move the most if we get the bull case scenario to play out? And it's obviously industrials. It's the Dow freaking Jones. It's the risk off assets. It's the assets that people buy when they think a recession is coming. So look at this. Dow Jones moved more off of its lows than any other indice literally in all financial markets across the entire world since October. Look at this move, right? We've been looking for this. When it was down here below the 200-week moving average, I'm thinking it's going to come back up to test the upper boundary of this channel. And it not only tested it, it broke through, and now it looks like it's back testing it above all the moving averages, kid. So you would be very dumb to not consider that the Dow Jones might be setting up for a massive move to the upside. Now, I don't know. I have no certainty at all that it's going to do that, but I can definitely see the logic of that playing out. Now, what you have to remember is if the Dow Jones does move to the upside here, maybe it only double tops. Maybe it goes to new all-time highs. Like, anything's possible here. If it does do those things, what will tech be doing? Well, tech will just be waddling. It's too weak. It doesn't have the velocity to move significantly to the upside. It will move to the upside if the market starts to move to the upside, but realize that Dow Jones will be the leader and tech will be waddling. Crypto will be waddling. It won't really be making significant advancements to the upside. Tech and crypto will only be making significant advancements to the downside, probably mostly through 23. That's just my guess. If I'm thinking about the event in which markets turn bullish and they start moving up, they're all going to move up together, right? It's just what is going to move up the most. Well, we already have all the evidence we need to support the fact that Dow Jones, industrials are the strongest sector in the event that a bull market starts to take shape. Now, the really, 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 really positive bull scenario is that the Dow Jones moves to the upside and then we avoid a recession and then tech and crypto catch up probably by 2024, probably around the time that the next Bitcoin halving occurs, right? Like this kind of logic. So what I want to point out just like right off the bat on the charts is look at this shape that's forming here. This is like one of the most bullish inverse head and shoulder shapes ever. Like, look at this. This is going to be a historic inverse head and shoulders right here. If this plays out to the upside, this will be as historic as the 2008 bottom inverse head and shoulders. Like, and let's like compare these really quickly. Look back here to the bottom of the 2008 financial crisis. Look at this head and shoulders here. This was a weaker head and shoulders. What I mean by that is, as this thing was coming off of its lows, this point here, this did not reach above this point. So to me, that's a weaker inverse head and shoulders. You see what I'm saying? But look what it led to. It literally led to a 12-year bull market. You know what I'm saying? But like, just compare this shape to this shape up here, the current shape that we're in right now in the present day, and you can start to see that this kind of looks like history in the making to the upside. I'm letting my imagination run wild in the bull case because I need to. Just like I can let my imagination run wild to the bear case, I literally need to be positioned to make money in both scenarios. That's a really difficult thing to wrap your head around. It's just like, well, then like half of your portfolio is just going to die in the dirt. Yeah, but that's fine. You got to realize the market only moves in two directions. If it moves up now, it will move down later. If it moves down now, it will move up later. So I'm either going to make money on the short side now, or I'm going to make money on the short side later. I'm either going to make money on the upside now, I'm going to make money on the upside later. You see what I'm saying? This is hedging. This is the art of what we do. The art of hedging is everything. You have to realize you don't get to know which way the market goes. You don't get to bet on the market moving in any direction. It doesn't work like that. You have to position yourself to be profitable in every situation. You have to position yourself to get paid no matter which direction the market goes. So as I open my mind and I just look at the Dow Jones, I'm just thinking like, industrials are really strong. This is a strong setup here. It broke out of the channel. It might be backtesting the channel. It's definitely backtesting the moving averages. And this is potentially a setup for new all-time highs here. Potentially. Obviously, like, I think a double top makes a whole lot of sense too. You can kind of see, you can almost see how this double top is forming right here. A beautiful double top just right here. And then maybe it only comes back to back test the upper boundary of the channel. Maybe it goes lower. Maybe it tests the moving average. Blah, 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 blah. Maybe this thing turns into another crash. But I think at this point in time, this is the setup for the bull case to take shape right here. I believe if there is a bull case to take shape, it's going to happen in industrials, and it's going to happen off of this little inflection point that we're in here. So I kind of expect to see upside starting the new year. If that upside just results in a double top followed by a massive crash, then great. I'll get to make some money in industrials in this little move right here. And then all of my short positions they'll just blow up on this move, and I'll literally make an absolute slaughtering. That's one way it could turn out here. But I need to be prepared for this to kind of almost be the end of the bear market, right? And the Dow Jones to be showing relative strength against other asset classes. And eventually, if the Dow Jones is to move to all-time highs here, other asset classes will eventually follow. It might take 2 years, but that's really not that long. You know, that's really not a long amount of time here. But we have to realize that the market is positioned to move higher from where it is at this time. It's just as equally positioned to move lower. But I just got to just point out the simple geometry of this shape here and realize that this is the makings of a historic inverse head and shoulders. You can literally see it. Just look at this. Look at this. You can see that this is an extremely bullish structure, and we may refer back to this in history as being one of the most unexpected reversal points when everyone thought the market was just going to crash lower and lower and lower. You got to remember, what are the interest rates doing? They're going higher. If you've been watching White Knuckle Report since the beginning, you know that if interest rates are going higher, we should expect the market to go higher. The only reason that I would expect the market to go lower, and the reason why I am positioned for it to go lower in, you know, like basically shorting the NASDAQ and things, is because we're very early in the interest rate rising cycle. In the beginning of these interest rate rising cycles, we see weakness in markets. But now, basically, 9 months into the interest rate rising cycle, we're starting to see some strength in the industrials. This is telling us that the interest rate rising cycle is going to do what it always does. As long as those interest rates are rising, the market has reason to move up. How does that work? That's because inflation is going down. If inflation is going down and people have more money to spend, they will spend that money on corporations, and corporate earnings will go up and the stock market goes up. That's why historically higher interest rates or a rising interest rate cycle causes the market to move to new highs. That is what's playing out here. Now, I don't know for sure which part of the interest rate rising cycle we're in, because I don't know how long the interest rates will rise for. I expect they'll rise for 3 to 4 years, I think. So I can speculate that this Dow Jones move here we're seeing right here, this potential inverse head and shoulders, this is the sign of strength that's coming off of that capitulative low that occurs at the beginning of every interest rate rising cycle. Now the market is starting to move in the same direction as the interest rates. That is what we've discussed so many times. That's what we've seen as we've studied history. Makes a lot of sense. You got to be positioned for the bull case. That's all I'm saying right now. Be positioned for the bull case. I've been very bearish. I was prepared to make money on this move here off this trend line, and that played out beautifully, but I'm not getting too greedy. I'm taking my profits and I'm reassessing the situation. I'm considering that maybe we're forming a significant bottom here. Maybe. Now, also, let's look at the DXY. Let's talk about how the DXY plays into this. So here's what's interesting, right? This downside move here, look where it's landed on the inverse Fibonacci, right? And my point in showing you this is that this has more room to fall. Now, as the DXY has been falling, which has been the most powerful upside moving asset class, well, it's the industrials, it's Dow Jones, right? Literally DXY falling, Dow Jones ripping. That's what I'm saying about the whole idea that Dow Jones has the most strength in the upward direction. So, in the event that the DXY continues to fall, the Dow Jones will continue to rise. You see what I'm saying? So now what I'm trying to point out is, how low can the DXY fall? Well, it can probably fall to this 0.5 level at a minimum. At a freaking minimum, it can come down to the 0.5 level. I would say at a maximum, it could come down to the inverse 702, right? That makes all the freaking sense in the world. But here's another scenario which actually supports the bear case. The bear case here would be that the DXY makes a double top. And you can literally just see the makings of that double top already right now. Look at that. A perfect double top situation. That's completely in the cards, right? So if this double top situation plays out, well, that means everything is going to hell in a handbasket. And tech, cryptos, semiconductors, they'll be going to hell faster than everybody else. Dow Jones will probably be holding up relative strength. That would be the event in which maybe the Dow Jones comes down to test the 200-week moving average, right? If the DXY makes this double top situation. But that's what I'm considering here is like I look at the DXY and I'm like, yes, it has more room to fall. The 0.5 is for sure a level that's really relevant that we need to consider. 0.618, obviously another level that we need to consider that's very relevant. And the 702 all the way down here, the DXY could be falling. It has more room to fall. But there's the other situation where it double tops before falling to lower retracement levels or lower inverse retracement levels. You see what I'm saying? So this is the art of what we do. We let our imaginations run wild in every direction. If you don't care which direction the market moves, because you're positioned to make money in every direction the market moves, then you will have an objective mind. You will be able to make decisions that make money in every outcome. You have to let go of your attachment to the market moving in any direction. You can't care which direction it moves in. You have to put capital on either side of the trade. You have to have capital on the long side of the trade. You have to have capital on the short side of the trade. And you have to realize that whichever direction the market moves now, it will move in the opposite direction later. So theoretically, if I'm long and short at the same time, I can still make money on both of those positions depending on the time frame, right? So if the market moves up, I will make money now on my long positions, but then it's going to move down later. And at that point, I'll make money on my short positions. You see what I'm saying? So even though I'm hedged to both sides of the trade, I can still make an absolute killing, never lose a cent, no matter which way the market moves, because over time, my less profitable positions will become profitable. Meaning if the market goes up, my short positions won't be profitable now, but they'll be profitable later. So this goes back to the idea of, my long crypto hedge. If crypto isn't going to be profitable now, it's going to be profitable later, especially probably after April 24 when we have the next Bitcoin halving. I mean, that to me is like the absolute worst case scenario for crypto, is that it doesn't do anything until the next Bitcoin halving. And if that's the worst case scenario, that's literally awesome, because I can just keep buying crypto from all the money that I make shorting the market, and maybe even all the money that I make longing the market, right? Because we've already seen that Bitcoin has broke away from the Dow Jones, right? As the Dow Jones moved up here, Bitcoin moved down, right? So that's a whole mysterious situation. I think that if I just kind of take that for what it is, that tells me that there's more downside to come, right? So that kind of brings my mindset back to the idea of like, I need to be exposed to the short side. I need to be making money on the short side because there's too much negative price action, right? There's so many asset classes that are just pulling the market down, right? People are just exiting the market via the NASDAQ and via crypto, that this Dow Jones move, it could actually just completely fail, right? In the bull case that I'm talking about, could completely fail. But I literally don't know. I don't need to know. I'm going to be positioned to make money if this, in fact, is a major, back test of an important trend line, which, it sure looks like that. At this very moment in time, this looks like a textbook back test of a really important trend line above all the moving averages. And that's, to me, an opportunity to make money on the upside. But like, if I look at the NASDAQ, it's hopeless. It does not look good at all. That doesn't mean it can't rip to retest these moving averages. And of course, if it does rip to retest moving averages, well, that would be the Dow Jones going absolutely ballistic to the upside, probably to new all-time freaking highs. You know what I mean? So it's just like, okay, so this is the name of the game. This is the art of hedging. Hedging is an art. It literally, like, portfolio management is about how creatively you can hedge your capital. And you have to accept that if you go all in on one side, you're an idiot. You can't go all in on one side. You don't know. You don't know what the market's going to do. I can make a bull case just as easily as I can make a bear case. That means I need to have capital on both sides of the trade. And the key understanding is that whatever the market does now, it's going to do the opposite later, meaning that all of my positions will be profitable depending on when I sell them. You see what I'm saying? It just all depends on when you sell. My long positions could be profitable sooner than my short positions, or vice versa. I don't know. I don't need to know. But I know I'm going to get paid no matter what direction the market moves. That is the key understanding of 2022. How do you get paid in every situation, kid? All right, dude. Happy freaking New Year. I hope you guys take this knowledge and make a ton of money with it, because I literally know in my visions, in my meditations, in my compositions, in my writings, I know that 2023 is going to be probably actually the most profitable year ever for me. And that's crazy because I was around, buying crypto back here, and I made absolute slaughtering on crypto back in these parts. But I actually think I'm going to make even more money in 2023 because of how my brain works. My brain is better. I'm using option strategies. I'm way more capital efficient than I used to be. So I literally don't care which way the market goes, and I'm still positive that I'm going to make the most money I've ever made in my life in 2023. So bring it on. Good, dude. Good, dude. I'll see you guys